talk about kind of trends in mobile payment fraud from different perspectives. We have four kind of different panelists that are doing different things, and the purpose here is to make sure that to give you kind of four different perspectives of what mobile payments and how does mobile fraud fit into these aspects. And we'll do it in a format that everyone will kind of introduce what they do in their perspective, give you some stats that they know from their business for a couple of minutes. We'll have some questions with them, and then we'll open it up for questions with the audience. So Mariana, I actually want to start with you. You're a VP of Payment Strategy, right, for the Federal Reserve Systems, and you probably have a very broad view of what payments and fraud within it has, so would be great to kind of hear your perspective.
Okay, thank you. And thanks everyone again. Probably sick of seeing me from this morning, but I'm going to talk about a couple of different areas that the Fed focuses on in terms of mobile and mobile security, one being the Mobile Payments Industry Work Group that I lead for the Fed, and then the Secure Payments Strategy, which if some of you are familiar with the Secure Payments Task Force that's went on for the last 3 years, where kind of what that's been going on there, what they accomplished. So let me just start first of all as from the Mobile Payments Industry Work Group. This is a work group that we convened about 9 or 10 years ago, believe it or not, in the industry. That's how long we've been looking at mobile payments and mobile wallets. And at that time, our goal was to, we thought then, figure out, what are the barriers and challenges to mobile payment adoption and in the retail space. So we were focused at that time on retail space. We were focused on NFC. That was going to be what was going to drive mobile payments 10 years ago. And we basically formed this group really soliciting people from the industry representing different areas and with the background and strategic direction and development direction around mobile payments. But we wanted, it was an invitation only kind of a closed group. So we wanted people from the card networks, we wanted some of the large FIs, smaller FIs, the merchant trade groups or other trade groups, some of the solution providers. And so it was about, at the beginning, about 25 to 30 people representing these different organizations. And we knew that, not unlike today, they came from different perspectives, what they think the way we should do this or not do it, who's doing what should happen, and we formed the group. So at the time we thought it would be something that we had maybe one meeting, and we had a good dialogue, because in a closed room, open ideas, what are your issues, share with each other your perceptions on what you think is really happening in mobile, what you think the problems are. And at the end of that first meeting, which was a whole day, they said, we want to do this again on a regular basis, and that kind of formed this work group. So we've been doing it, as I said, for almost 10 years. The group's probably been enlarged to about 45 or so different companies. We've expanded the number of merchants and banks. We've got the big tech companies like Google, Apple, and others that are members of the group as well. So we really do have a good mix of organizations. Now, clearly they come from different competitive backgrounds and different views. But within the group, we try to talk about areas that we think that there's some mutual interest in either collaborating or at least educating and informing each other on what goes on. And security has been one of those areas that we spent a lot of time on. That sort of drew us into doing a lot more research around tokenization with their input so that we could write reports and share those with the industry around the value of tokenization and how it worked. We also spent time the last year or two looking at the card-not-present environment, but based on mobile-initiated payments going into the card-not-present space. So we've done a lot of work with them on those things, and our outputs are, again, summaries of the discussions that show the key findings from the group without attributing anything to any individual organization, as well as white papers and subgroups that we've done. So over the years, I think this has helped inform the industry of what the trends are from what I consider these experts in their fields, as well as helping to inform policy at the senior Fed level around what's going on in this side of payments. And again, the last couple of years, it's been a more focus on security than it probably was originally. And clearly, we've changed our mission. It's not just NFC. It's not just retail at point of sale. We've moved into the digital world. We recognize, and everyone agrees, there are multiple platforms and technology that's going to be used in wallets, and it's not quite as simple as straightforward as everyone thought. So I'll stop there. I can talk about the other one later, but I'll move on.
We'll get back to you.
Yeah.
So Frank, you're the Chief Sales Officer for TableSafe. You can tell us what TableSafe actually does and what you learn.
Yeah, so TableSafe, we work primarily in the restaurant business, and that's an industry that has some unique challenges. When you think about the restaurant industry, they do have a lot of fraud. They have challenges around maintaining the client experience. When you go to a restaurant, you don't go there just to do a transaction, have something be very generic. The restaurant owner is trying to create an experience for you and for you to enjoy your stay, and they don't want payments to intrude in that. But at the same time, they have to have secure payments because they do get a lot of fraud. Now that the EMV shift has occurred, restaurants that haven't adopted EMV technology are getting what we're calling friendly fraud, where customers who realize that if the restaurant didn't use the chip and they just did the swipe, they can call up and dispute that charge, and the restaurant's ultimately going to eat it. So if you're a restaurant, and let's just say it's pretty common for a restaurant to be about $1 million worth of revenue, operating at thin margins, maybe 8% margins. If you're eating a lot of fraud, friendly or otherwise, it's really hurting your business. And these are institutions that don't have huge budgets to hire security professionals and IT professionals. Again, if you're $1 million a year restaurant at 8% margin, you don't have a director of IT on your staff. So they're really reliant on the industry to come up with solutions. And there have been some great things that have come along. I mean, things are now tokenized and encrypted, so now they don't have to worry so much about data breaches, because that's another area that they had extreme exposure to. No small merchant wants to hold card numbers. They have staffs that, according to the National Restaurant Association, I think the number is something about 50% of restaurant employees have stolen from the institution at least once. So you think about, you give your card to, I used to work at American Express. Anyone at American Express who had access to a card number, even one card number, had a background check. They went through annual compliance training. Today, we all go to a restaurant. We give our card to a waiter. They go off in the back room to swipe it, put it in, do whatever they do. And during that time, they could take a picture of it, get the security code, or they could go and just do a transaction on their smartphone. You don't have any control of that card when you give it. So just think of the craziness of that. It's go to a bank, all kinds of controls. Restaurant, not so much. So, the challenge and the opportunity that mobile payments brings is that obviously the customer doesn't have to give up that information. They're in control of it. They can actually put in the tip amount, because that's another thing that happens. When you put that, say you gave a $5 tip, and well, what if the server, when they get at the end of the day, went back to, oh, that was a $6 tip, put it in. At 30 days from now, when you look at your card statement, are you going to remember if it was a $99 dinner or a $98 dinner? You're not going to catch that. So that's another area that a restaurant owner has to sort of, it's reputational risk if someone did catch on to that. So what mobile payments really does is it gives more control back to the customer. And what we try to do at TableSafe is try to give that control, but still create a payment environment that feels familiar to the customer and doesn't feel obtrusive. A lot of people have probably been to Europe or Canada where you get the device at the table and the waiter's standing over your shoulder watching you put in the tip amount. We're a little bit unique in that we say we're pay at the table and leave at the table. So the waiter actually leaves the device at the table, goes off, does more productive things for the restaurant, and leaves you sort of alone with the device, and where you can privately and securely perform your transaction. So those are the things that we're trying to do in terms of helping restaurants achieve that balance between experience and securing their payments. And mobility, obviously, our mobile payments plays a big part into that.
Thank you. Now, Rafael, you're at ClearSale, so you're kind of the vendor of fraud prevention technologies.
Yeah, so ClearSale helps online merchants to prevent from fraud while not affecting that much the customer experience. And my background in person, I'm a statistician, so I'm in the analytics part of the operations. And I'd say that in this, I've been working with this in the last 10 years. So it's been a very dynamic industry, and especially in the recent years with the growth of the mobile payments. Recently, I saw this research that says that 60% of the smartphone users have done some purchase online through their smartphones recently in the last 6 months.
Is that a U.S.
Yeah,
stat?
in the U.S. Yeah. So it's growing, and with that growth comes also some challenges, right? And those orders, those particular transactions are riskier, and that's the common sense about it. But when it comes to risk, I think we should see it in two perspectives, right? So risk is the number of transactions, the fraudulent transactions, divided by the total transactions. So something is riskier when there's a lot of fraud attempts, or if there's not too much, or there's not enough good orders to divide it, so that you could dilute this risk. And it's important to see this way, because talking about fraud prevention and risk, chargeback risk in this environment is also talking about bringing more good customers and making them, letting them having a good experience, a good customer experience. So among ClearSale customers, we did this research. There's a negative correlation between the merchants. So we work with a lot of merchants, right? So in different segments, mainly retailer and travel. And among our portfolio of customers, there's a correlation between the percentage of orders that are through mobile devices and the percentage of risk on those orders, right? So how riskier those orders are comparing to the average. So for instance, the 10% of the merchants that have the largest, the higher percentage of orders in mobile have also 50% less risk, less fraud attempts per order, let's say. And our hypothesis is that the same merchants, the same environments that are user-friendly and then that can bring good customers to their environment are also the ones that protect better about the fraud, because they, as I said, they dilute the fraud attempts. So it's a two sides of the same coin, right? So in the risk side of this coin, let's say why, then we can ask ourselves why those orders are riskier, why somebody or a fraudster would target the mobile rather than other channels, let's say, for their job, pretty much, right? And I'd say that our experience is that the reason why a fraudster goes to a certain channel, a certain merchant, a certain product, is because they succeed. So whatever they can do that was successful in the past, they will try again, right? So I'd say that the explanation why they try in the mobile is because they succeed more in the mobile environment than in the desktop or laptop or whatever environments. So that being said, I'd say that the reason why it's a riskier transaction also is because we struggle more to defend from those, to prevent from those. And then comes the question why we struggle to defend from those orders, to prevent fraud on those. And I'd say that the foundations of card not present fraud preventions are on the retailer, on the traditional laptop and desktop, let's say, environments. And when you go to mobile, you find some challenges. So for a fraud prevention manager, traditional fraud prevention manager, I'd say that mobile brings three main challenges, three main risks. The first one is the lack of data points, right? So the more you go to smaller devices, less likely you are to ask for more information. So in a regular form for a traditional retailer, you will have multiple phone numbers, you have shipping and billing address, full address instead of only zip code. And when you go to mobile, you go smaller. So you are asking for less information, and the traditional policies and variables, let's say, for fraud prevention get a little in trouble. The second reason is because of time. Very frequently, depending on what's the service or product you're selling, you need real-time decisions or near real-time decisions. And that also takes away some tools that you have when you had time, for instance, manual reviews and stuff like that, or at least on-time manual reviews on the flow. And the third, at least among ClearSale's customers, the customers that have both mobile and regular e-commerce transactions, usually mobile transactions have a lower average order value. So you have less money, less financial space to utilize, let's say, solution providers like ClearSale or data sources or whatever you're utilizing. So basically, it's the nightmare for the fraud prevention manager because there's no traditional data points, there's no time and no money. So it's pretty much what brings us all together to talk about it, and I think we gotta.
And do you see a difference between mobile web transactions and native apps?
Yes, we do. I mean, in-app orders for our customers are less riskier than mobile. So again, I think it's just a hypothesis, but our hypothesis is that is because you bring more valuable customers, good customers to your app than you would to your. I'd say fraudsters might be a little lazy, so they prefer. I don't know. So yeah, so the more attractive, user-friendly a mobile environment is, more good customers you bring, and more you can reduce your fraud attempts, not by your fraud rate, not by reducing the fraud attempts, but increasing the number you divide for.
Okay, well, we'll get back to that. Just want to introduce Craig, our last panelist from Cineverse.
You may not have heard of the company name Cineverse. The company's been around 30 years. We basically connect the world to 7 billion phones and handle all the business related to that. So we connect to the operators around the world and also handle their business when you're roaming and settling all those transactions, who gets paid, and so forth. And more recently, we've evolved to focus on enterprises. We deal with a lot of financial institutions. We've recently launched what we call our Secure Global Access Network. It is a network that can connect over the cell network that never touches the internet. So in terms of protecting data or transferring data between two entities, we can actually do that at scale without ever touching the internet. So for the hackers sitting in their basement in Russia and in other countries in China, it makes it a little bit harder to hack into a network that you can't get to through the internet. Another thing I wanted to focus on, so I run mobile engagement for the company, and of course we're broadening out beyond text messaging to an omni-channel world too, but my job is to focus on the human element, the customer experience for financial institutions and to combat fraud. I have a question for the audience. So how many of you have received a fraud alert in the last month? That's probably about half, right? So follow-up question. I'm asking the audience questions now. So how many of you responded to it? Most of you responded to it? Yeah, so you typically get a fraud alert is like a charge was made on your card. Was this you? And you say, yes, no. Very simple experience, very little friction. So in a sense, we can fight fraud, obviously prevent fraud. So one of the things we do, and is a substantial portion of our messaging, is one-time passwords and tokens. And most of you, when you lost your password, you'll get that one-time password from your bank, or even a token to authenticate to a website too. So if you're getting a fraud alert, potentially that happens after the fact, but that mitigates that fraud transaction. So how many of you think said, yes, that was me? Was it most of you that said, wow, that's less though? How many of you said, no, that was not me, and you actually caught fraud? Well, that's an interesting, okay, that's a significant number, right? So that's something that the banks and financial institutions are very interested in terms of timing after that transaction. If we're integrated with the banking system, we can do that within 3 to 5 seconds of the transaction. So certainly if you do it 24 hours later, the damage has already been done. So one of the keys there is to do that fraud alert notification very quickly and shut that down. And of course, it benefits both the customer, but it also benefits the financial institution too, because denying charges doesn't benefit anybody. It's a terrible customer experience, and it costs many billions of dollars to financial institutions to block a unnecessarily. Another thing we can do is think of it as a two-way interaction too. So you had a quick two-way interaction to say, yes, that was me, no, that was not me, problem solved very quickly, or mitigating the damage very quickly. But also it's easy to convert over, transfer over to a two-way chat with a live agent, right? So that both saves call center dollars. By the way, you probably know this, but call center calls are very expensive. If you call a financial institution, a bank, a restaurant, a merchant, if you actually call someone and get someone on the phone to say, what's going on with my bill here, that's very expensive. Depending on who you talk to, $5 to $8 each call, that's very expensive. If you have a two-way live SMS chat, an agent can handle 5 to 10 chats at the same time. And it can be a very seamless experience for the customer that, was this you? Yes, it was me, but I have a question on my account. I'm not sure about the amount. You can have a quick chat with a live person and resolve the issue right from your phone very quickly.
Well, what happens to the transaction while you're waiting for the answer? Is it goes through and then they stop it, or is it pending or voided?
Well, depending on how they implement it, they'll get your answer very quickly, right? The message, if you say, no, that was not me, that's up to the bank to implement,
I'm actually asking about, it didn't happen to me several times, and we know kind of the stats on that. You make a purchase, you're not next to your phone, because you make a web purchase or an iPad purchase, your phone gets a text, you don't see it, you're waiting for the transaction to go through. What is the response that you're getting as a consumer, and what is the bank doing while they're waiting for an answer? Or you can be doing a transaction in China and the SMS just doesn't show up. Right? What happens in that dead zone, and how often does it happen?
I just had this happen a couple days ago. It got declined, even though I answered it pretty quickly. And the message came back and said, haven't run it again.
Okay. Are you seeing different banks implement it differently?
Yes, they can implement it differently. I mean, the recommendation would be, typically a bank's going to hold up the card until you answer, but if you're not there and you don't answer, it's going to start getting declined. But hopefully you answer very quickly, and they mitigate that situation and do that. You had another question, though, too. What if they don't get your text, right? Well, if you're in China or wherever you go, your phone's off or your battery's dead there, too. That's why I mentioned omni-channel, too, so we can have fallback rules to say, well, if they don't answer the text, try email, try another channel, try push, if for some reason you're not answering text. But typically, text is the most converted channel, too. Usually it's the other way around. People will ignore an email or ignore a push notification and always pay attention to text messages, too. And fraud alerts, by the way, I don't know if you're familiar, but typically people have to opt in to receive text messages, right? You have to capture their express consent for anything related to marketing. But under the U.S. guidelines for TCPA, fraud doesn't come under that. You can send a fraud alert without the user's permission. You're not violating privacy there. It's just, you can send it to them, everyone's okay, the federal, government is
Even if you have
okay.
European passports?
I'm sorry? If you have a...
It was half a joke.
Right.
Just a question. You talk about the monitoring that you do at the financial transaction level. What about the provisioning transaction in the beginning, where do you do monitoring your process of getting the card in the wallet to begin with? Is the card holder reading the card?
Well, we can help with that transaction. We don't do the monitoring. That's up to the bank, right? We integrate with them. So they trigger events that we would send the messaging.
If I understand your question correctly, what happens when I open up an app or a wallet and I want to apply a new card to it? Do they do the verification? So
Are you finding that financial institutions that you work with, not necessarily do they do the verification, but do they have processes and rules in place to be able to detect that as what you would have versus
go ahead.
Yeah, no, I would venture a guess to that. It would all depend on the data that's shared by iOS, by Apple or Google with them. If they don't see, if you're for a mobile wallet, if they're adding an actual credit card to a mobile wallet or debit card, right? As long as they see data coming back, they can get that verified. They can send a text message to verify that, or start a chat or a voice call and verify that transaction. But if it's all built into the OS natively, then
I may try to answer it.
Yeah.
So I haven't introduced myself early on. So I'm Michael. I'm the CEO of a company called Forder, and we do kind of real-time fraud prevention for a lot of the enterprise kind of retailers and travel companies. And the problem for someone like Cineverse to really challenge these transactions is oftentimes when you add it, it's on the retailer's end to decide whether they want to verify it or not. The bank doesn't know something happened. You just register a card. They need to try to authorize it and then go to the bank for the bank to even know that that card was applied. A lot of the times, someone will use Twilio or someone else to do essentially the same thing, but that will be for Uber to do or for, I don't know, Grubhub to do or whatever you're registering your card with, and not for the banks themselves.
No, right, I get that piece of it, that's with the merchant's application.
Mhm.
Or merchant's,
Mhm.
in-app and browser purchases, different. But I'm thinking of adding the card to the OEM wallet.
To OEM one. Okay.
The Apple Pay.
So,
Right.
yeah, so in that case, with Apple, and we talked about this morning too, and Apple, Google, and Samsung Pay, there's that whole identity and verification process. So the TSP is going to, the merchant's going to say, or the OEM is going to say, I want to add this, and I want it to be tokenized. So it's going to go to the issuing bank, and they're going to do the identity and verification process with some data they might get from the OEM and their own risk management process. And then they're going to score it and say, this is, here's our confidence level that this is good, and then based on that, it'll get put in. But if they have some suspicions, then they can step it up and say, we have to get to the customer, or I'm going to send them a one-time password, or I'm going to send them to the customer service fraud unit to ask for additional information before we're going to approve putting this token for this PAN into the wallet. So they do have a process for that across those three.
And financial institutions, because I'm not from.
The
US,
card issuing
financial
banks.
institutions here in the US, will find much in the way of provisioning for opt-in.
No, because I think they've learned from, when Apple initially started, and they realized they've got to make sure that with all their data, if they're not sure, they've got to ask for that additional one-time password. But again, it's only based on the level of risk that they think they have, that they might ask the customer for more information. But I think they're managing it. They've learned how to do it with the right information and knowing when do they have to step up the process.
So maybe more on that, right? We've talked about security, and we sometimes neglect the user experience aspect of it, right? You talked about that, whether it's SMS friction or any other type. Have you, I don't know, maybe Marian, for you, done any broader study or have information from vendors or merchants on the effect more friction has on their conversions, or actually the cost they're paying for becoming more secure?
I don't necessarily have any data or anything on that, or cost information, but I think that to them, the balance, the trade-off is, if I don't do it right, I'm going to pay for it on the other side anyway, so that it's been built into the process of when they're provisioning these accounts. And then sort of jumping over to the card not present world with the 3DS work that's the version 2 that's still not commercially available here, the expectation is that's going to really help reduce the costs and the fraud levels to the merchant, and obviously shift the liability back to the issuer if in fact there is a fraud. But at least by using those tools, if they implement that, they're definitely going to see a much better risk authentication process and not interrupt all the customers. The expectation is by doing this behind the scenes risk assessment, they can let more of these transactions go through for the customer. The merchant can decide to let it go through on top of that if they are comfortable with they know the customer. And basically maybe only about 5% they expect to be actually interrupted to say, we need you to give me more data or a one-time password to go through. And that's on the card not present side.
Yeah, I would just say there is a significant number, due to false positives, right? That it really wasn't fraud, but you irritated the customer, blocked the card, and they didn't make the purchase.
And when you're looking at it from, like, you work with a lot of FIs, when you're looking at it from the issuer's perspective, not from the merchant's perspective, they have to make a decision whether to challenge or not. The fraud liability is not on them unless it's 3D secure. But if it's a regular transaction, the liability is not on them. If they block it or challenge that, someone may move to another card.
Yeah,
Right?
absolutely.
Basically,
Absolutely.
you're using,
Do it too many times, absolutely. You'll drive them away. Yeah.
so how are they balancing it?
Well, if you can do it part of it is doing it quickly. Focus on the customer experience and the friction. Within seconds, and they confirm, and you don't keep. Well, it's up to them to do the trigger, right? If they challenge too many things, just because their rules might say because it was out of the country, or they normally don't make purchases this high, then they're going to drive customers away. But if they're quick and painless.
And going back to the merchant's perspective, one study that comes to my mind is, I think it's a Forrester study that says that 66% of the consumers report that they wouldn't they would reduce or never come again to the same merchant if their online transactions declined. So again, the impact of the false positives on a merchant's perspective, 2/3 of the consumers reporting they would feel bad about being falsely declined. And I think that's relevant in a way, especially in a situation in which you need real time or near real time decision, because obviously you're going to make mistakes, and then the cost for that, besides the fact that you're preventing from your cost with fraud, you are also preventing from having this particular purchase and revenue, and also the future, all the lifetime of these customers is on risk when it comes to these instant decisions.
Frank, you mentioned friendly fraud, and I want to tie friendly fraud to some of this type of authentication. What happens when a consumer was authenticated, but now they submitted trying to attempt friendly fraud?
Right, so this really happens when primarily a restaurant hasn't gone to the EMV technology. So the bad actors out there realize, oh, okay, they swiped my card instead of doing a chip transaction. I can now challenge that transaction, and even though I had dinner there, and I can call up the card, and the restaurant's going to have to absorb that because of the EMV liability shift. I mean, it becomes a situation where it wasn't an EMV transaction, the restaurant has to absorb that. And now that more and more people are starting to understand that, we're starting to see friendly fraud is starting to increase in the restaurant industry, because while some of the quick serve restaurants where you've got the pay at the counter type environment, a lot of them have moved to the chip-based technology. A lot of the table service fine dining, again, because of the experience issues, they don't want to bring a clunky piece of technology to a high-end restaurant, drop it on the table, and have you put in your card with someone standing overside and having one of those holsters where their seat comes out like you're turning in your Avis car. It's just not part of the experience of that restaurant. So that is becoming an increasing source of fraud, for these operators. And that's kind of really where we come in trying to provide that typical environment, provide technology that looks like basically a typical check presenter. That's actually a device that we have the NFC technology in there, so you can do mobile payments. We've got the chip card reader there, so you can do the everything right there, sort of in the privacy of your table, without really taking away from the experience. So that's, like I said, as the bad actors are becoming more aware, so it's interesting. EMV was deployed to reduce fraud, but in the way it opened up a new opportunity for people to perform fraud, just sort of a different function. And then that's just the normal cat and mouse game that goes on and will continue to go on. It's a constant struggle to keep up with the different openings that clever people can take advantage of.
I have a question over there.
Yeah, so while you're talking, it's hard for us. What do you think, specific for restaurants or otherwise? It sounds like there's a big opportunity here for merchants and financial institutions to partner better, like merchants and issue banks. No matter who has liability, to deter the friendly fraudster, right? So bringing better technology to the table is great, but that's what are your thoughts about that?
Well, I guess that there's lots of opportunities for better communication to go on between the merchants, the financial institutions, and the consumers. Before joining TableSafe, I was with one of the card brands, and one of the issues that was always present when someone got declined, they just didn't know why, and a lot of times the merchant didn't really understand why they were declined. And I'll share a story of what happened to me. I live in New Jersey, and after Superstorm Sandy came, we're out of power, and everyone was running backup generators. And after 5 days, I had to drive to Pennsylvania to get, gas, basically to run my generator. So I go out, drive the 50 miles out there. I fill up my 5-gallon tanks with gas, but I'm driving a diesel truck, and the gas station didn't have diesel, so I had to go to another gas station. And guess what? When I tried to buy 20 more gallons, but this time diesel gas, my card got declined because out of pattern spend. I just went to 2 gas stations in close proximity, and only because I worked for a card brand did I know that that's what happened. But the person at the counter, the 16-year-old at the counter, probably not 16, maybe 18, you know, had no idea. It's like, no, you actually have to call the brand, and you know, and they're going to want to talk to me and verify that it's me, and then you're going to let the charge go through. But normally, like I said, if I hadn't worked for the brand, it would just been a declined transaction. The person at the counter would be like, oh, you must be a crook or something, and it would have been just very awkward, right? And so that's an example of, I think, just better communication needs to go on, just in terms of better decline reasons. You know, SMS technology can alleviate some of that. Again, the phone networks were a little clogged up during the Superstorm Sandy recovery, so we had challenges there too. But there's definitely opportunities for all 3 parties to communicate better, to authenticate and determine if it's a valid transaction that was intended.
Yeah, I think when people talk about friendly fraud, they always think it's a merchant's problem. Issuers have potentially even more costs, because if you reported a service chargeback or a friendly chargeback as fraud, they need to cancel the card, issue a new one. You're not using the one that, while you get this one, you have to re-register it. So there is, I think some of the challenges is you have, I don't know, 1 million merchants, 14,000 banks. Now all of them have to work together on a specific transaction, so it almost kind of calls for a middleman, which maybe, Marianne, a question for you, or is the Fed trying to facilitate such middleman or some policy in that space?
Well, so I wouldn't call it a middleman or a policy, but what they've been trying to do, and we've heard it several times today, in terms of the need for more collaboration and working together. And so, with the task force and going forward, as they have kind of shut that down, but are looking at ways to potentially do something going forward in some very specific security areas around information sharing on fraud data, as well as potentially data protection and identity verification. By bringing together a smaller set of subject matter experts in the industry to start to talk in more detail about some of these areas of concern, hearing some of these examples are really helpful, because then if the parties on all sides of the equation are talking about how they can address this, then maybe they can come up with ideas and suggestions and ways to get this changed and address some of these problems. But it's going to be a long process. Again, trying to get everybody to agree if someone has to make a change on one side or the other, but at least come up with general direction in terms of how we can improve this process, and knowing where some of these pain points are, which are the bigger pain points to try to solve. So that the Fed's role is really more to pull the parties together and try to help talk these things through and maybe work through some of these problems and come up with solutions. And that's kind of what some of their next steps they're looking at.
Thank you. Raphael, to you, we talked earlier about potential usage of passive biometric as part of the authentication process. Can you elaborate on that?
Well, yeah, I've been working with fraud prevention for more than 10 years, and obviously we talk with peers and people that are trying to prevent fraud, and we come up with these brilliant ideas of how to reduce fraud. But I think everything that we've been saying the last minutes goes back to the customer experience, right? So you talk about the ability, the increase of the ER ability to prevent fraud when it comes to when you add biometrics and tokens and stuff like that. But on the other hand, there will be a conference about marketing, on online marketing, that will be saying, people on a similar room like that will be talking about reducing the amount of information you ask, the number of steps you ask the consumer to take. So I'd say that my point here being is just trying to always keep in mind that adding steps to the process, either it's biometrics, taking a selfie, fingerprint or whatever, it's always a trade-off. The trade-off that Marianne talked about between user experience, bringing more transactions to your book, so that you can again dilute the fraudulent ones. So the more you can make it seamless to the customer, I think it's the better. But obviously it's a case by case decision. It's a merchant by merchant decision if you want to add those stuff. They are eventually the complementary elements of the absence of data points that I talked before. So it's again the trade-off.
Okay, and by data points you mean everything the user actively provides.
Yeah, correct.
What you can ask them in
Yeah.
a mobile app. Okay.
I think we have a question.
Oh, I'm sorry. Right. You stole my next question. So, I don't know if anyone wants to answer, but the wallets usually don't assume liability. They're a technological solution, so they can't vouch for you.
I know, but at least you have a way to say if it's through the wallet, you can see when you know the card. At least you have a higher provision rate in the last four weeks. Because if you're doing the wallet, you're seeing the same flow of plans as you go outside of the credit cards. And wouldn't it be logical to say, like, hey, the wallet will give you the networks, I can send you more data, increase my organization becomes more fraud. Everybody is happy with that.
So, some of what we're doing is monitoring what the fraudsters are doing. And the biggest badge of honor when Apple Pay launched was for a fraudster to install Apple Pay, load a stolen card into it, walk into an Apple store, buy a new iPhone with Apple Pay, and do that twice again in Apple Store. I think the first months the loss rate on Apple Pay transactions within Apple was 6%. So it's logical, it just doesn't work well yet. At least from what we're seeing, would be happy to hear a different perspective.
Well, I think with, I mean, certainly the mobile wallet is another indication of the person who owns the card is the person staying there trying to make the transaction. I mean, it helps, but you know, you probably have serious views on this. But you know, all the algorithms, all the out of pattern spend algorithms, you know, the issuers are going to need all those in place just because, you know, just because it's the person, you know, is it still intention, you know, is there are a lot of things that could still occur that the you know, maybe it's Mardi Gras in New Orleans and you know you've had too much to drink and it's you with the you know, with your app and someone saying, oh here charge this, you know, $5,000. The issuers are certainly going to want to have, you know, a say on a $5,000 charge happening at 3 in the morning. I'm thinking that's going to trigger some sort of algorithm somewhere.
But
But
yeah, I
it
was just going to say,
helps.
I would think it would help the trust score to know if you could tell that transaction was NFC versus,
Yeah.
you know, a web.
I mean,
transaction.
Right.
it's a factor, but not the only.
Right, not all wallets are alike. And so, yeah, the NFC, they've got all the added layers of security, but an online wallet, digital wallet that maybe isn't from Amazon or PayPal, if you've got account takeover, then the fraudsters have stolen all the different either account numbers or all the other PII information, they build another account. The issuer or the merchant maybe can't tell right away that this is a fraudulent account. It looks good because they have all the right information and it goes through. And there's a lot of that. I think that's probably one of the areas that is increasing in the account takeover space.
So all the conversation we had so far was about card payments, regardless if it's through a wallet or not. How we're seeing an increase in online payments that are not card originated, and it can be from people using loyalty points, all the way to they're connecting their bank account and making kind of
Transfer.
probably more so in Europe than here, but I think in the US it's also on the rise. Any specific challenges in non-card authentication?
Well, it's not. In our experience, there's some stories or some cases that we saw in which they kind of combine different payment methods. Like by they I mean the fraudsters. So they try to make a credit card transaction that makes them positive historical data, historical, and then go to another payment method or the opposite. So I'd say that the more likely, the most likely payment method to make a lot of money to the fraudsters is still the credit card not present orders. But at the same time, it doesn't mean that they won't utilize, for instance, gift cards in this meantime, because they as he says, is a mouse and cat game, because they know that you're gonna use, you know, the rules of being the same credit card or the same person with the same name with the same shipping address, and then they utilize other payment methods that generates no loss for the merchant, so that they can have the positive or the whitelist. They can go to the whitelist, and then comes a transactions with CNP. So it's not exactly what you asked, but I'd say that the different payment methods, they add complexity even to the credit card fraud prevention space.
Certainly, any transaction can use a phone authentication, right? Anything could trigger an SMS to you to say yes or no to, unless, of course, they had a full account takeover and created a false identity where they control everything. Then.
And how many transactions are you seeing to the point that are valid, but the buyer is not the rightful owner of that card or bank account or whatever the payment method is? Because then people don't have access to that specific phone number.
I don't have any stats on that. Do you mean how many people actually had a phone number registered
Right,
with
let's
a
say
stolen
my
card?
girlfriend's using my card to buy something.
Yeah.
You send me a text. I don't know what's going on, but that's perfectly fine.
Yeah.
Any stats on that, or too hard to quantify at this stage?
Well, what we have is a similar situation. Some of our merchants utilize the SMS to validate some all their orders, actually not some, and then or a small percentage of them, and we have to make some calculus to understand how much lower is the risk of those orders comparing to the average order credit card. So if somebody says yes with the phone number that they filled on the process, and it's a phone number that somehow our algorithms tell that it's the, as we say, the hot number, the number that is more likely to be associated to this person. So our statistics is that it's 20 times lower the risk. Okay. So for countries in which we're talking about 2.5% of the orders are being fraud, it's like 0.1, 0.15. Okay. So it's still much lower. So we add a lot of positive information on the transaction, but at the same time it's not zero. So there's no silver bullet. This is the final learning, right? So you try one way, but they try another, and there will be friendly fraud, and people utilizing somebody else's phone number. They will validate their phone today for utilizing to a lot of transactions 3 months later. So, yeah.
Thank you. I think we're running out of time. So thank you, and I'm sure you'll be around for more questions and kind of one-on-one.
I'd like to get that data. That's great.